Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing stocks that have X dividends next week. So every week I release a video covering stocks that have X dividends next week. This week I'm going to go ahead and create a video, plus I wrote an article on my website. Now, as you know, I recently revamped my website. Looks a lot cleaner, neater, and I went ahead and typed up an article. And if you are subscribed to my website, you would have got a notification via email that a new post is up. So that's what we're going to be covering today. I have 5 stocks that have X dividends next week. I release them every week. I'm going to go ahead and create content for my website. That way, going forward, if you guys would like to check out my website, thefinancial-investor.com, right below here in the green bar in the bottom, you guys can check it out. Very nice looking website now. I like it. And I'm going to go ahead and continue revamping it here slightly, but that's not the topic today. We're going to be doing stocks that have X dividends for August 27th through the 31st. I have a few ticker symbols there. We're going to go over the companies, take a look at their 10-year net income, free cash flow, and revenue, and then take a look at their current 1-year outlook as far as where their stock is, yield, dividend, payout, and so on. We're also going to cover quite a bit more information, so I don't want to try and make this video too long, so I am going to dive into it. If you are brand new to the channel, hit the subscribe button. If you do like this content and these articles, let me know by giving the video a thumbs up and checking out my website, and I'll have a link to this article in the description below and in the comment section. So what I normally do is cover stocks that have X dividends next week. I screen them for PE ratios less than 25 to be right around or below the S&P 500. I like to also get stocks that have yields over 1.5. That way, if you're investing $100 into a position, you're getting at least $1.50 back in dividends. Plus, you'll have that capital appreciation going forward as long as you invest in healthy stocks. I also like to look for rising revenue, net income, free cash flow over the last 10 years and 5 years, and projected growth to be better than it is currently, which means their PE ratio going forward is less than it is right now, meaning that the earnings are expected to grow. I also put out some content as far as dividend dates, price comparisons to yield, PE comparisons to the S&P 500, their payout ratio, dividend history, and a few other items. So here, these are all ordered by the X dividend dates from the August 27th to the 31st. And we're going to go ahead and start off with our first stock here, ticker symbol CFR. This is Cullen/Frost Bankers, provides banking and financial services primarily in Texas. They serve energy, manufacturing services, construction, retail, telecommunications, and many other industries. Their ex-dividend day here is 30 August, which is next Thursday. You would have to buy this stock on Wednesday or prior to be eligible for that payout date on the 14th of September. Now here in this top graph, this is a 10-year graph, meaning that if you take these numbers here, percentage gained over the last 10 years, you can divide them by 10 and find out on average what is their increase year over year. For example, dividend increase percent change is here in the blue. We'll say that this is 60% divided by 10. That gives you a 6% year over year increase in their dividend payout. We can also do the same for their price, which is nearly 110%. That's 11% increase year over the last 10 years. We can do the same with their revenue here. 5.5% increase year over year for their revenue. Free cash flow, 18% year over year increase in their free cash flow. Very healthy. You can see here, this is a financial company. It did take a hit here between 2012, 2016, where many financial institutions did take a hit. As you notice down here, this one has been paying out dividends for more than 25 years. So it survived the 2008 recession, the 2000 recession. It's been paying out dividends. It's a dividend aristocrat. So as we're not going to go ahead and cover all the information here, but just know if you're looking at these, you can divide them by 10 and you'll get your year over year on average. So here, moving down to the second bubble. So here, this is the 1-year outlook. So right now, this stock recently increased their dividend payout at the start of the year. They're paying out 67 cents per share each quarter. Their price at $114. That they have a dividend yield of 2.35%. This shows 2.09. The correct yield is 2.35, meaning that they are fairly valued at this moment. The return on invested capital is 11.8, which is basically how efficient are they at turning their what is it? Their invested capital into money. So whatever money is invested with them, how good are they as a company as using it to generate more money? So this one does very well. Anything over 10% on a return on invested capital is a well-run company, one worth investing in. Here we can see that the current PE ratio is here in the blue at 18.3. Their forward PE is a 16.87. Their price to book here, I believe here in the purple, if we look here, price to sales. So the price of sales is at 5.85, which is here in this purple bar, and that actually shows about average for the year. And the price to book is showing at a 2.3. So when charted, it does show the current stock is a higher price to yield, very slightly, which it could be considered overvalued at this time. The stock is trading below the S&P 500 PE average of 25, below 60% payout ratio, and it has had dividend growth for 25 years. I would consider this one nearly recession proof because, let's see, what was its payout ratio? Do I have that? Yeah, payout ratio here is 39.6, so a very healthy payout ratio. Their price to book value is at a 2.3, which is less than 3.0, where value investors would consider it a value. So with the yield here just coming up slightly, this may be a fairly valued. I put overvalued here, but kind of looking at it now, and I didn't see that the dividend yield is more like 2.35. I would consider this one fairly valued. Price to book, good healthy payout ratio, good healthy dividend growth over the last 25 years, and you buy them at $114, you're getting paid $2.68 for each share that you hold of them throughout the year, or for the year. Next stock, we have ticker symbol MGA. This is the Magna International Operates, or Magna International operates as a diversified automotive supplier in North America, Europe, and internationally. So this is not just national, it's international. Ex-dividend date is again next Thursday. The payout date is the 14th of September. You would have to buy this stock on Wednesday or prior to be paid out on the 14th of September. So again, 10-year graph here, we can see that their net income is up 80. We go 2 decimals over, or 849 by 10. That gives it a 84.9% increase in their net income year over year. Their price is up 28% year over year over the last 10 years. Their, what's that, blue, dividend, they increased their dividend payout by roughly 26% each year for the past 10 years. Their free cash flow is up 12% year over the last 10 years, and their revenue is up 5.9% year over the last 10 years. So a very healthy looking company there. We can see that they currently pay out 33 cents. They were paying out in that 26 cents dollar range. So you can see this is a very nice increase there from 26 to 33. So here, back at our 1 year, they pay out 33 cents per share each quarter, currently priced at $54.29. Let me go ahead and zoom in there. I know there's a lot of people using the mobile devices, so hopefully that is not too blurry and you guys are able to see that. So they're currently priced at $54.29. That gives them a yield of 2.43. Again, this data shows 2.23. They're actually trading at a 2.43% yield. This company has a return on invested capital of 15.21%. Very nice return. They know how to handle their money and turn it very profitable. Their current PE is at a 8.3, forward PE 7.9. They're currently at a price to book of 1.6, which is very healthy, and their price to sales shows a 0.479. So this could be, I'll let you guys decide if it's a red flag or not, but it does look pretty normal there. Their other numbers look very healthy. So MGA stock, when charted, does show the current stock has a higher yield to price. This graph may not show it, but I was looking up the information. Their yield on average was at one of its highest points it's been in quite a while. This graph makes it look very flat, but at 2.43, you're buying this at one of the highest dividend yields that you could for the year, I believe, somewhere around there. It's also trading below the S&P 500 PE average of 25. It's actually 24.81 today when I took the thing. The PE is at an 8.36, and it's going down to 7.9 here in the future. Payout ratio is at 19.3%, so a very healthy payout ratio. And their price to book is at a 1.68, which is less than 3, where value investors consider a value. This company has had dividend growth for the last 6 years. So, very good looking, healthy company. We have ticker symbol MOFG, the Midwest One Financial Group. It's a bank-owned holding headquartered in Iowa City. It operates 43 branches. So again, ex-dividend next Thursday. Buy it Wednesday or prior. You would then get paid out on the 17th of September. Here, their dividend percent increase is here in the blue. So only 2.7% increase in dividend. You can see during the recession here in 2008 or 9, they did cut their dividend here. That is why it's not as high as it should be. So on average, 2.7% increase over the last 10 years. Now their price here in the orange up 13% on average every year. In the red, we have their revenue up 19% year over year. In the green, 18% for their free cash flow. And in the purple, we have nearly 12% on average year over year increase for their net income. For the 1 year information, they pay out 19 cents and a half a cent there each quarter for each share that you hold. They're currently priced at $33.31. They have a dividend yield of 2.35. Don't let this fool you. This shows 2.19. It's actually 2.35. That gives them, or they have a return on invested capital of 4.36. This is one of the lower ones that we've seen over the first one that we checked out was also a financial. This one does have a lower return on invested capital. This one currently is priced at a PE ratio of 19.71. Forward PE is 12.38. Its price of sales is 3.1, and its price to book is at a 1.17. So very on the front end looks like a very healthy stock. So when charted, it does show the current stock is a higher yield to price, which may indicate it is this is actually supposed to be undervalued. I'll have to fix that because this yield is at a 2.35, which is right up in here. That gives it one of the higher yields for the year, nearly one of the higher yields for the year. The payout ratio is at a 29.2, so very healthy payout ratio. Has had dividend growth for the last 5 years. Its price to book, it's at a 1.17, which is lower than 3.0, where value investors would consider a value. So here, PE 19.71, forward 12.38, S&P 500, average is 24.81. I'm going to change this to the industry or the sector that it's in here in the next videos. They pay out 78 cents per share for the year, or 19 cents each quarter for each share that you hold. Payout ratio 29.2, healthy, dividend growth 5 years. Number 4, we have ticker symbol NBTB. The NBT Bank Corp provides commercial banking products and services to individuals, corporations, and municipalities. So ex-dividend date is 30 August, which is next Thursday. Again, gotta buy it on Wednesday or prior. Payout date is the 14th of September. Here, 10-year graph. Started in the blue here, up 25% over the last 10 years. That's a very slow 2.5% increase in their dividend. Looks like they flattened it out. So between 2008 and 2013, they never raised their dividend. That's why it has been flat. Now, if we looked at this dividend growth over the last 3 years, it may be a different picture. But just know that during the last recession, this one may have decreased it, or they did lock it out there. So they may have cut it back first before locking it out. But over the last 10 years, very slow dividend growth. Here in the orange is the price. So this one has gained a 6.4% on average price increase per year. In the red, 7% increase in their revenue year over year. In the green, 4% increase in their free cash flow. And in the purple, we have an 8% on their net income year over year over the last 10 years. So not the most amazing stats there. They pay out 25 cents each share for every quarter. They're currently priced at $41.04. That gives them a yield of 2.44, 2.29. This is actually the correct one, so 2.44. I can't change this data that they provide on on the on the Y charts, but I did pull this other information here from Dividend.com. Their return on invested capital is 5.04. The current PE is at a 19.09. Their forward PE is at 16.27. Their P price to sales ratio is at a 4.2, and their current price to book is at a 1.83. So here below, when I checked them out, they were with a yield of a price. Boy, I have to take a look at this actually. I wrote down price to yield, which may be undervalued. I really have to take a look at this. If you guys check out this article tomorrow on my website, it will have it up to date. And I'm going to go ahead and change some of this information to be industry below the industry, or the stock is below the S&P 500. But here I'm going to go ahead and have the industry in here to show how this stock compares to its own industry. So again, continuing on here. Below 60% payout ratio, dividend growth for the last 5 years, price to book value 1.83, which is less than 3, so it could be considered a value. Stock 19.09, PE 24.81 for the S&P 500, 2.44% dividend yield. They pay out $1 per share for each year, and they have that $41 price point right now. Payout ratio of around 39.5%. Dividend growth for the last 5 years. Now, the last one here is called ticker symbol CATY. This is CATY General Bank Corp. It is a holding company for the CATY Bank, a Californian state chartered bank founded back in 1962. They offer a variety of wide financial services. So we do have quite a bit of financials in this week's ex-dividends. I'll try and have it a little bit more diversified here forward. Ex-dividend date is 31 August, Friday. So again, got to buy this one on Thursday or prior. You would then get paid out on the 14th of September. In the blue, 12% on average dividend increase year over year for the last 10 years. You can see they did decrease it here in 2008, 2009, and then flattened it out. So they cut it and then held it between 2009 until 2013 before they began increasing it. They pay out 24 cents per share. They have had an increase there of 12% on average. They're just trying to catch up where they should be, I'm sure. Here in the orange, price up 16% on average year over year for the last 10 years. Revenue here in the red, 8.2% increase year over year. Free cash flow in the green, 8.4%, and their net income is up 32% on average every year over the last 10 years. So they currently pay out 24 cents per share. You can see that they increased from around 20 cents per share to 24 cents per share. So they do hop around. This is a little bit better looking yield here. This shows 2.23. This shows 2.16. So depending on the day of when you're buying the stock, it could be considered undervalued or overvalued, or right around that. Well, the yield itself, based on the payout for the year divided by the current price, that gives you your current dividend yield. Their return on invested capital is 8.12. Their current PE ratio is 16.57. Forward PE is 13.01. Their price to sales is a high 6.1, but it does look at one of the lower points here for the year. And its price to book is at a 1.69. So when charted, it does show the current stock is a higher price to yield, which may indicate it may be overvalued at this time. The stock is below the S&P 500 at 25. It's at a 16.57. It is sitting below 60% payout ratio. It's at a 29.1, so very low payout ratio. Dividend growth for the last 5 years. Price to book value at a 1.69, which is lower than 3.0, where value investors would consider a value. So dividend yield around 2.23. They pay out 96 cents per share for the year, or 24 cents each quarter for each complete share that you hold of them. Payout ratio 29%, and dividend growth for 5 years. So that is it as far as the video and article go. I'm going to go ahead and make some corrections on there. I hope you guys did enjoy this video, and if you guys would like, check out the article. And if you do have any other friends or investors who are interested in dividend stocks, check these 5 out. Share the article, share the video. And if you're interested in getting started in investing, I do have some links up on my website. But aside from that, that is it for today's video. So, as a friendly disclaimer, I am not a financial advisor or tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them, looking for some good deals out there. And I will have this article fixed up. And if you guys check it out, description and in the comment section. Thanks for tuning in. I will see you next time. Have a great day. Bye.